Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Tuesday, the 14th of July, 2026, and we've just had the release of the US CPI report. In today's video, I'll break down everything that you need to know about that report, as well as the other news impacting markets ahead of the US session. Let's get into it. Starting at a high level, the US-Iran conflict continues to escalate, with President Trump announcing that the US would place a blockade around the Strait of Hormuz starting at 4 o'clock today. That has continued to support oil prices, though, as I'll talk about momentarily, that hasn't had as much of a negative impact on other risk assets. And that is because we just had the US CPI report, which came in much cooler than anticipated, with CPI on a headline basis falling minus 0.4% month over month. That brings the year over year reading in that measure to 3.5%, also well below expectations. And the one where all the focus was the core CPI reading, after two prominent Federal Reserve officials said they'd be watching that 0.2% month over month reading in deciding whether to raise interest rates. It came in well below that at 0.0% month over month. The year over year rate in core inflation fell to 2.6%. And to my eye, this is likely to scuttle any chances of an interest rate hike from the Federal Reserve here in July. And we can accordingly see those odds falling sharply after they had risen as high as 40 or 50%. On some of those Fed headlines yesterday. As a result, we do see a bit of weakness in the US dollar and strength in major stock market indices. That comes despite some mixed news on the earnings front. The big headline here is that IBM pre-reported its Q2 earnings a week early. This is a very bad sign for IBM shareholders, and anytime a company does this, it's usually a negative sign. Fell well below expectations for earnings and revenue, and as a result, the stock is falling by about 20% pre-market, something that could weigh on indices. We've also had reports from major banks that I would say on balance were fairly strong, but there's a high bar, so we're not seeing as much of a move up in those stocks ahead of the US Open. Lots to digest today, but for me, it all comes down to today's chart of the day, which is the US dollar index. The world's reserve currency, as you can see here, is falling sharply on those fading expectations for at least an imminent interest rate hike from the Federal Reserve. Here on the 4-hour chart, we can see this 100 spot 60 level is absolutely critical. That's where the 200 period moving average on this 4-hour chart comes in. That's where a rising trend line off of the lows that we saw at the start of June comes in. And that's a level of previous support and resistance that we've seen over the last couple of months. So for me, it all comes down to that 100 spot 60 level, which I think could well give way as we move through this week. And if it does, we could see the dollar index continue to retreat as traders price in a slower path of interest rate hikes from the Federal Reserve. If it does indeed break, the next level to watch is the psychologically significant 100 level, followed by the level of previous support down around 99.50. So keep an eye on that level in your trading today and throughout this week to help guide your trades. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one quick favor before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks, and best of luck with your trading.